If you're considering purchasing a house, you probably already know it's a significant financial commitment, but how much money do you really need to buy a house? So in this video, we're going to break down the key expenses and tips to help you budget effectively for your first home. So let's begin with understanding the bigger picture. Buying a house is not just about the sales price. You want to consider all the several expenses that go into it. So down payment, closing costs, taxes, insurance, prepaid interest, and they all go into home ownership cost up front. Let's dive into these to give you a clearer picture on what to expect in the beginning and how much money you'll need for down payment plus closing costs and all these other things. So generally speaking, your down payment is the largest upfront expense. Now, traditionally, a lot of people think, and the advice is to save 20% per house, but there's a lot of options that are lower down, and every situation is different. So you're going to want to talk to a lending professional, but FHA programs, for instance, or VA or USDA can offer lower down options for eligible buyers. And there's also sometimes down payment assistance for certain eligible buyers as well. So first-time home buyers are a big one, first responders, teachers, medical professionals, really can help out with the down payment assistance programs in many states. So, however, remember the small down payment amount. This means that your payments are a little bit higher, and you may have things like mortgage insurance. So you're gonna have to weigh the balances of balancing out. Do I wait to save 20%, or do I buy now and let appreciation help and with a lower down payment? So it's important to know you don't need 20% down. I mean, you have options, but the down payment is one piece of the puzzle. And then, a cost that often surprises first-time homebuyers are closing costs. So let's just say you do put 5 or 15 or 20% down. On top of that down payment percentage, you're going to have closing costs. And over the years, I've been in the business 19 years, and over the years, we've seen costs increase, just like housing prices, just like milk and eggs. Cost of employing people, cost of technology, cost of system, that cost has continued to go up. So you need to make sure you understand what those costs are. So this means, the fees, the expense that you pay for the mortgage. This can include credit reports, appraisals, title insurance. A good rule of thumb, though, is to budget at least 2% to 5% of the purchase price for these costs. So for example, a home for $250,000 would mean that you need to save an additional $5,000 to $12,000, and be aware of any extra costs from the association, or if you're doing any buy down discount points. I have other videos on that as well. We can attach, but it's important to understand this. So you have your down payment plus your closing costs, and closing costs aren't just from the lender; they're all the costs. So everything from title insurance, appraisal, like we covered. But it doesn't include, realtor commissions. Typically, as a buyer, usually what will happen is the listing agent and the seller will agree to pay the buyer's commission typically. And so that's something that's not usually in your out-of-pocket expense when you buy a house. Now, it's a good idea to consider getting a home inspection. It's not required for the loan typically, but a home inspection is a really smart step. And it typically costs somewhere between $300 to maybe $500 or $600, depending on the size of the house. And it's super important to help you be a successful homeowner, to make sure you don't have surprises down the road. And we always say use this for two things. You're going to use this as your inventory of the house. So keep the report somewhere safe long-term, because you may have to reference it down the road for something you may need in the house. Very, very important. Save it. It's an important report. Also, it's going to give you leverage to go back and fight anything with the seller. If the seller doesn't want to repair something, you'll have this big old long report that's going to possibly tell you everything that's wrong with the house. Remember, there's about 70 things that are on there probably. And the inspector's job is to tell you everything that's wrong with the house. Your job and your agent's job is to go back and negotiate anything that needs repaired, or you get credits for it. For more information, you can reach out to us. We'll talk a little bit more about that. We have some other videos as well. But your mortgage payment is also more than just repaying the loan. It can include the interest, the property taxes, home insurance, or association dues. So these costs actually, usually included in your monthly payments, and HOA dues are typically outside of it. So another cost that's included in the payments are taxes, property taxes. And this can change over time. So home insurance and property taxes and HOA can change. And you're usually, if you have a fixed loan, your principal and interest will not change. But these can play into your cash to close as well, because if there's a transfer tax or if there's money that you need to pay up front, that can also go into the costs that we were talking about for cash to close on the value of the house a lot of times. So you just want to be aware of that. That's going to change over time. And then another cost is home insurance. Home insurance can rise and fall based on what's going on in the insurance market. This is a requirement for mortgaged houses. Good idea if they're unmortgaged as well, but it covers damages to your property. The cost can vary based on the home value and what areas you are and how much coverage you want, but it's super important to talk to a great insurance agent to understand your coverages and make sure you're covered for what you need. And then if your new home is in a community and it shares like amenities and it's in an HOA or a home association, there may be fees for that. So that covers like the maintenance, the shared facilities, and this can vary significantly. So, some areas can be very low. We've seen even $30 a year and all the way up to thousands of dollars a month. So it's important to understand that. And when you're buying a house, the cost may be one thing. So you might see a low priced house, but then if you look at the HOA is higher. Sometimes it's better to buy a higher priced house with no HOA and you actually get a better payment, a lower payment, than a lower priced house with a higher HOA. So keep that in mind when you're looking at houses. Owning a house means that you're responsible for the upkeep. Also, so budget around 1% of the home value a year for maintenance. Sometimes you'll pay it all in 1 year, or sometimes you'll pay it in year 3. But about 1% of the home value for maintenance is a really good rule of thumb that I use personally in our household budget. Now remember, understanding the costs is key to having a successful home buying experience, but also a successful long-term experience being a successful homeowner. One thing that we are very passionate about here at NEO is wanting to make sure you're not just successful for the next 30 days when you're getting the house, but successful for the next 30 years. And this is extremely important for you to understand what you're getting to up front. But homeownership can be extremely rewarding, and it is one of the key wealth builders in America. But not only building wealth, but you're also building communities, building families, building support, building confidence around the communities. And it could be so rewarding in so many different ways, in addition to be financially rewarding. So thank you so much for watching. Hope this information clarifies costs involved with buying a house. And remember, planning and budgeting is really your best tool for a smooth home buying journey and being a successful homeowner. So my name is Kevin Brierton, certified mortgage planning specialist with NEO Home Loans and the Kevin Brierton team, your no excuse lender. And we're excited to help you and educate you with the process of buying a house. If you want to reach out for a mortgage strategy call, be honored to help. Super easy. You can click the link mortgagestrategycall.com. Go to mortgagestrategycall.com. And what we'll do here is a 15-minute really discovery call, understanding what your needs are, how we can help you. In this call, we don't need to pull credit. Sometimes it's like, hey, we got to go and we get something done right away. But the point of the call is to understand what you need, answer your questions, figure out a game plan on how to make sure you're a successful homeowner, whether you're refinancing, buying, whether you need a reverse mortgage, whether you need a home equity line. We can talk about home equity lines and the goods and bads of those as well. Everything housing related, mortgage related, we're here for you. If you know anybody that could benefit from this video, please share it. We get questions all the time, and I know people need help with this stuff. So please share it, forward it, like it, comment it. I'll jump in the comments below as well, and we'll catch you on the next video. Take care.